In April, MEXC reported a significant increase in TradFi futures trading volume, with AI semiconductor-related assets showing the most dramatic growth. Among these, Intel Corporation, INTC, saw a 1,684% increase in futures trading volume. This surge closely mirrored the rally in US AI chip stocks during the same period, as more users turned to crypto platforms to gain exposure to traditional financial markets. The rise in trading activity reflects a broader trend of investors seeking alternative ways to access the performance of traditional assets through crypto-native platforms. The surge in TradFi futures trading volume on MEXC was not limited to AI semiconductors alone. Advanced Micro Devices, AMD, saw a 543% increase in futures trading volume, while Taiwan Semiconductor Manufacturing Company, TSM, gained 278%, and NVIDIA increased 213%. All four assets posted triple-digit growth in April, aligning with the strong performance of U.S. stock markets during the same period. As geopolitical tensions stabilized, risk appetite in the U.S. stock market rebounded, with both the S&P 500 and NASDAQ 100 reaching new all-time highs. The performance of major U.S. tech stocks played a central role in this trend. Intel Corporation, INTC, rose roughly 50% in April, marking most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Its largest monthly gain in over half a century. Advanced Micro Devices, AMD, surged 74%, becoming one of the best-performing stocks in the S&P 500. NVIDIA climbed approximately 14.4%, reclaiming the $200 level, while TSM also strengthened alongside rising demand for AI computing power. These movements were closely reflected in the trading activity on MEXC, where users increasingly turned to futures contracts to gain exposure to these stocks. Beyond the AI semiconductor sector, large-cap technology stocks and major indices also saw strong performance. The QQQ index rose 186%, GOOGL gained 177%, and the SB 500 increased 92%. Other assets, such as Meta plus 121%, AAPL plus 78%, and the NAS 100 index plus 50%, also recorded significant gains. The intensity of the market rally was clearly reflected in the trading activity on MEXC, where users increasingly sought exposure to these assets through futures contracts. The rise in TradFi futures trading volume on crypto platforms like MEXC suggests a growing appetite for traditional financial exposure within the crypto ecosystem. This trend may reflect broader shifts in investor behavior, as more users seek to diversify their portfolios or hedge against market volatility using crypto-native tools. The surge in April was driven, part by the strong performance of U.S. markets, but it also highlights the growing acceptance of crypto platforms as a viable avenue for accessing traditional assets. While the exact drivers of this trend remain unclear, several factors may be at play. The growing interest in AI and semiconductors as a dominant theme in U.S. equities likely played a role. Additionally, the availability of zero-fee trading on platforms like MEXC may have lowered the barrier to entry for new users seeking exposure to traditional financial markets. As structural opportunities in U.S. stock markets become increasingly evident, more users. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Appear to be turning to crypto platforms to gain exposure to these assets. The next signal to watch will be whether this trend continues into the following months. If the momentum in TradFi futures trading volume persists, it could indicate a broader shift in how investors access traditional markets. Conversely, if the trend slows or reverses, it may suggest that the April rally was a temporary phenomenon driven by specific market conditions. Investors and traders should closely monitor the performance of AI-related assets and the broader U.S. stock market to gauge the direction of this trend moving forward.